Today, banks are everywhere. They help us save money, take out loans, and make payments. But have you ever wondered who created the first bank? How did people store and trade money before banks existed? The story of banking is a journey through time, from ancient civilizations to modern finance. The first banks weren't just places to store money, they were centers of power, economic growth, and even political influence. And the first bank in history. It wasn't just about holding gold or silver, it laid the foundation for how the entire world economy operates today. So, let's take a deep dive into the history of banking, uncover the world's first bank, and explore how it changed the world forever. How ancient civilizations handled money. Before banks, how did people save money, trade goods, or get loans? The answer goes back thousands of years to some of the earliest civilizations. In Mesopotamia, modern-day Iraq, around 2000 BCE, the ancient Sumerians and Babylonians had systems for storing and lending valuables. Wealthy temple priests and merchants acted as early bankers, keeping people's gold, silver, or grain in their temples. In exchange, people received a written receipt, a concept that later evolved into banknotes. These early bankers also provided loans. If a farmer needed seeds for planting, they could borrow grain from the temple and repay it after the harvest, usually with interest, one of the earliest examples of credit and lending. Similar systems appeared in ancient Egypt and China, where grain banks stored food for people in times of need. In ancient Greece, wealthy individuals and temples offered loans for trade and military campaigns. But these early banking systems weren't yet formal institutions, they were based on trust and reputation, and they lacked organization. That would change with the rise of the first real bank, the first recognized bank. The first official bank as we know it today was the Banco di San Giorgio in Genoa, Italy, established in 1407. While banking existed in different forms before this, the Banco di San Giorgio was the first structured financial institution that provided services similar to modern banks. This bank was created to manage public debt and help the government handle finances, especially as Genoa was a powerful trading hub. Wealthy merchants and city officials used the bank to deposit money, finance trade expeditions, and issue loans. One of the biggest innovations of the Banco di San Giorgio was creating the concept of a bank account. Instead of carrying around gold or silver, merchants could deposit money and use written instructions, similar to checks, to make payments. The bank became so powerful that at one point it even governed territories and had more financial influence than many European kings. But this wasn't the only important banking institution of its time. Other banks were emerging across Europe, each contributing to the future of finance. The bank that changed the world. If the Banco di San Giorgio was the first structured bank, the Medici Bank, founded in 1397 in Florence, was the bank that revolutionized finance. The Medici family, one of the wealthiest and most powerful families in Italy, started this bank to finance their trading empire. Over time, the Medici Bank introduced several financial innovations that transformed banking forever. Double-entry bookkeeping. This accounting system ensured that every transaction had a record of both deposits and withdrawals, preventing fraud and errors. Letters of credit. Merchants could carry a paper document instead of gold or coins, allowing for safer and easier trade across Europe. Branch banking. The Medici Bank expanded across Europe, setting up branches in major cities like London, Venice, and Bruges. With these innovations, banking became more secure, widespread, and essential for international trade. It also meant that banks could lend large amounts of money to governments and businesses, shaping the economies of entire nations. Without the Medici Bank, the Renaissance might never have happened, since they financed artists, architects, and scientists, including Leonardo da Vinci and Michelangelo. But as banks became more powerful, they also became more controversial. The rise of national banks and paper money. By the 17th and 18th centuries, banking had become a central part of government and commerce. Instead of relying on private families like the Medicis, countries started establishing national banks to control their economies. One of the most important was the Bank of England, founded in 1694. It introduced government-backed money. Paper banknotes became widely accepted instead of just gold and silver. Centralized financial regulation. The bank helped manage national debt and ensured financial stability. Monetary policy. Governments could control inflation and economic growth through banking policies. Around the same time, the Bank of Amsterdam, 1609, became the first bank to offer checks and deposit accounts, allowing people to access money without carrying physical currency. As banks evolved, the global financial system became more interconnected. Banks were no longer just for wealthy merchants or governments. They were becoming institutions for everyday people. By the 19th century, modern banking had arrived, the birth of modern banking and global finance. The Industrial Revolution, 1800s, saw a massive expansion of banking. As businesses grew, they needed larger loans, leading to the rise of investment banks that financed industries like railroads, steel, and oil. Some of the most famous banks we know today were founded during this period. J.P. Morgan & Co., 1871, became one of the most powerful investment banks in America. Deutsche Bank, 1870, helped finance Germany's economic growth. SBT, 1865, founded to finance trade between China and Europe. Banks became global institutions, connecting economies across continents. By the 20th century, savings accounts, credit cards, and stock markets had become mainstream. Fast forward to today, and banking is no longer just physical. With online banking, mobile payments, and cryptocurrency, the industry is continuing to evolve at lightning speed. The future of banking, what's next? From ancient temples storing gold to digital banks and cryptocurrencies, banking has come a long way. But where is it heading next? Some major trends shaping the future of banking include digital banking and AI. Traditional banks are being replaced by online-only banks and AI-driven financial advisors. Cryptocurrency and blockchain, Bitcoin and Ethereum are challenging the idea of government-controlled money. Universal basic income. Some economists believe banks may play a role in distributing government-provided income. Cashless societies. Many countries, like Sweden, are moving towards a future where cash is no longer needed. With all these changes, one thing is clear. Banking is far from over, it's just evolving into new forms. The dark side of early banking, scandals, corruption, and controversies. While banks have played a crucial role in shaping economies, their history hasn't always been smooth sailing. Even in the early days of banking, corruption, scandals, and financial manipulation were common. Some of the first major banking crises happened centuries ago, proving that financial fraud is nothing new. One of the earliest banking collapses happened in the 15th century when the Medici Bank, the world's most powerful financial institution, fell apart due to bad loans and political interference. Despite its initial success, the bank expanded too aggressively and took on high-risk clients, including monarchs who refused to pay back their debts. Eventually, the once mighty Medici Bank collapsed in the late 1400s, leaving many creditors in ruin. Another infamous banking scandal occurred in 1720 with the South Sea Bubble in England. The South Sea Company, backed by the British government, promised massive profits from overseas trade. Banks and investors poured in money, but it turned out to be a giant financial scam. The market crashed, wiping out fortunes and causing widespread economic devastation. This event led to the creation of stronger financial regulations, shaping how modern banks operate today. Even the world's first banks weren't immune to fraud, mismanagement, and risky lending practices. The early financial world was like the Wild West, with little oversight and plenty of ways to exploit the system. But over time, banking evolved with new regulations, ensuring that money was handled more securely and transparently. Despite these dark chapters, banking remained essential for economic growth. Without these early failures, we wouldn't have today's modern banking regulations, fraud protection, and financial safety measures. The mistakes of the past shaped the future, making banks more accountable and structured than ever before. So next time you walk into a bank or use your phone to transfer money, remember, banking wasn't always as safe and organized as it is today. Banking has always been about trust. The world's first banks weren't just about storing money. They were about trust, security, and making trade possible. From the temples of Mesopotamia to the Medici Bank, from the Bank of England to Bitcoin, the fundamental idea remains the same. People need a safe way to manage money. So, what do you think? Will traditional banks survive in a digital world? Will cryptocurrency replace national currencies? Let us know in the comments. And if you enjoyed this deep dive into the history of banking, don't forget to like, subscribe, and hit that notification bell for more amazing content.